Listen, do not make the mistake of making your children the beneficiary of your life insurance contract. And here are two reasons why. Number one, if you passed away unexpectedly and your children are still considered minors, the life insurance carrier will not pay out the death benefit because they're not yet adults. You know, we recently heard of a situation of a father who got a life insurance policy and then made his child the beneficiary. Unfortunately, he passed away unexpectedly. Now, the life insurance company is not paying out that money because they said he needs to be 18 before he can claim that money. So now the mom is struggling financially because she's not the beneficiary, and now she has to look for other means to take care of the child. So that's the first reason why you don't want to do that. The second reason is, let's assume that the child is 18 years old. You have to understand that most adults are not financially disciplined enough to handle large sums of money. So can you imagine a child, let's say 18 years old, gets $200,000, $300,000 all at once? What do you think is going to happen to that money? They're going to waste it. You know, we also heard of a case not too long, actually last year, of a mom who passed away with two daughters. Both are in their early 20s. When they got the death benefit payout, the eldest daughter took her share and literally went on a shopping spree and started traveling around the world. The youngest daughter, she's a little bit more conservative, and she was really seeking help as to what to do with all this money because she didn't want to waste it. That's what happens when you leave large sums of money behind to people who are not financially disciplined. Now, alternatively, the way to kind of safeguard whatever assets you're leaving behind is to get a living trust set up, also known as revocable living trust. You see, when you do that, you're able to make the trust the beneficiary of your life insurance contract, and then your children the beneficiary of the trust. So what that means is that whenever you pass away, that death benefit will be paid into the trust, but you would have already left instructions on how they ought to use that money, so that way they don't squander it. So if you have life insurance contracts, if you have a home or any other assets for that matter, then you want to make sure that your children do not waste should anything happen unexpectedly, then you want to make sure that you get a revocable living trust set up as soon as possible.